Hi, Elijah. Hey, brother. It's so exciting to have you and catch up with you. It's 2024, January the 17th, I think, today. How are you? How is family? How are the kids? How is your lovely
We
wife?
are
Everybody.
extremely blessed. Thank you, Vinny. Happy New Year.
Ah,
Glad to
Happy
see you,
New
and
Year.
we're super blessed. And to see your so positive smile even brings more fun to life.
Thank you so much. There it is. And I'm going to start it right now from the presenter. You could see me now, right? The
Hmm.
thing. So essentially, just to say that, Elijah, what this strategy income fund is, it's Monil Investment Investor Presentation. It's a 506c for accredited investors only, but it can be shared and advertised, and we can talk to anybody and everybody in the whole universe, right? So, all your family, friends, neighbors, everybody.
Hmm.
So, a confidential investment summary, of course, they have to go through this and then get to know what it is all about. Why Monil, which is our company, as you know, Monica and Neil put together. You know
Yeah.
that you built the brand. I mean, you are the
Yeah.
starter of it, and you got me going on all these great things. You and I have been friends for so long. And then fund overview, and then investment strategy and summary of terms, asset management team, and everything. So this is the first one, Monil Advantage, joint partnership. So we are doing Monil Investment and JT Capital with Sapan and Pooja Talati. We have been together for 5 years in, like Bentley, Princeton, Lakes, a lot of different properties we have bought together. We work along very well, very well. It's hard to find good partners, by the way, but we are very happy that this new fund is collaboration. So we are raising 10 million right now. They are raising 10 million, but the fund is $75 million total. So we have so many deals on our table for this fund to allocate money, and I'll show you why. And institutional grade assets. So we are not going to be investing in buying multifamily at all. Oh, what did Vinny say? We are not buying multifamily, but we'll be buying positions in the multifamilies, which are with the operators who have half a billion in their AUM. They have to have half a billion, and the operators have to be savvy. These assets, multifamily, needs to be like newer assets, newer
Hmm.
assets built in the last 5, 6 years,
A
seven
class, pretty
years.
much, right?
A
A
class,
class.
A class, A class, A plus, like that. High quality institutional grade, and then active asset management. That's what we've been doing for the last 16 years, is purchasing multifamily, and then we are able to managing them. But now we manage through big companies like Ram Partner, Well Partners, RPM, RKW, Greystone. So we manage the managers, right? So that's how we'll be asset managing our this fund also right there. And the risk management, our team has risk control and consistency at the forefront. That's the beauty of it. Every investor's money, we want to make sure we guard it better than anybody else, right? We have fiduciary responsibility. And under Monil, we have assets under like 1 billion now, 1.2 billion actually, 7,500 units. We have sold so much of them, completed the cycle and everything. 40 principal syndications and funds, 30 deals completed. And we are, I always have said, I have always believed in an individual's ability to shape the world around them through positivity, that smiles, enthusiasm, as massive selfless action. So, right there. But let's go into the fun, what it is about. So, this fund highlights are will be buying or taking position, not buying, but will be lending our equity, is the
Hmm.
word, to 18 to 22 assets. What? If each asset is worth 40 million, we'll be actually looking at putting our money into over $3 billion. What? So it's a very exciting time because There are lots of multifamily people, they bought it right, but their rate lock has expired, or their insurance cost has increased, or they need some push, give them money, $1 to $4 million, so that they can get a refinancing done at a good rate. So
Mhm.
that's what our fund is. It's going to come right after the senior loan from the lender, will be right next above their private equity investors. That's how the positioning will be, which I'll explain. And the life of the fund is only 3 to 5 years. We'll be paying distributions quarterly, and we'll
All
be
right.
paying from day one. When they wire the money into the fund, we start paying out from right that point forward. That's the beauty. So they don't have to wait 2 months, 3 months, or anything like that. And target assets core plus 100 units in multifamily assets, predominantly in Texas, Florida, and Georgia, where we have done very, very nicely, and
Yes.
migration patterns are there, that. Yep, yep,
I've been
yep.
in all your places and I've seen all your apartments. They're
Thank
beautiful,
you.
and the
Thank
emerging markets are there. Yeah.
They are. They really are. Migration reports, and how much we, do the data searches and everything, and the trends. That's what we are doing. And the investment with excellent opportunity for value creation and downside protection. That's what we are really doing. We want to make sure we downside the protect, like that. Then this one over here, incentives. What it is that we are paying Class A members 12%. What? People are asking us, how could you pay that high? Because we could give our equity at 16 to 20% with these operators. They are asking us to give us money at, instead of doing cash calls, or they could do cash calls too, but it takes so much longer time and everything. So this way, they will give us 16 to 18 or 20%. We give our investors 12% out of that. Plus, if they want to go B class, they could get 10% preferred return, and then with equity upside. So they might get, 15 to 18%, paid out in with the equity gains. So there are
Hmm.
two classes only, class A and class B. And I'm doing that seminar tomorrow night, which is at 5:30 Pacific.
Hmm.
But hopefully, some of your investors might like to join and love to even see more detailed, things. And the good part is, the more we, get money right here, right? Then the more splits are better. There is incentive, to give more returns back to investors.
Hmm.
And then, I'll come back again. So essentially, this is why this is the best time. This year and next year are the best times for this kind of fund. Institutions and family offices have been doing it all day long. So Sapan and I came up with this idea to do it at a smaller scale, because family offices and big hedge funds, they don't write a check for less than 5 million or 10 million, but we'll be able to give 1 million to 5 million. That's our niche. With good operators, solid operators, the fundamentals are really strong. Reduced competition is in that segment. Expense shock is where, what we'll be helping them with. Insurance premiums, if they are higher, property taxes, or putting pressure on the high quality, like that. So market opportunity, just like in, a slide, and we'll share this the whole deck with your investors, so that
Hmm.
they could take their own time to go through it. Income fund benefits, the current income, equity upside is there, defensive portfolio, you know, all that is there. Portfolio is focused on high quality multifamily assets with limited concentration levels. You know, we are not going to give money for foreclosing assets or anything, or older assets. We are, only going to help those who are cash flowing already. These
Hmm.
multifamilies need to be cash flowing, so that we could give them this injection of equity to survive, to go to the next level of refinance, or if there is a rate lock or insurance premium and so on. You know,
Mm-hmm.
yeah. And then, of course, this is where we will be. See, like senior secured debt is right there. Then equity of the investors is on the right side. I'm showing equity, but strategic income fund will come in between the two. So we have special privileges through our contracts to be right after the senior secured debt. And if we need to, we'll get a paperwork done to get it approved by the senior debt if we need to. Otherwise, many times the equity can be applied without any obligations or problems with the senior debt. I'm just going in a little bit more detail.
Mm-hmm.
you know
Mm-hmm.
but the core assets will be just like I said, in the Texas, Florida area. Then use of proceeds will be bridge loan, Cape Rat extension, Cape rate extensions, capex, funding gap for the refinance. Position will be priority position through preferred equity and sub debt, and then sponsorship. Well established operators, typically over half a billion in AUM. So our fund will just get cream of the cream. Now we are getting lots of them on our table already. Like we had one deal, we just starting the fund, but they want to give us 20% for 9 months of usage of $2 million, because they're
Wow.
going through a refinance, which will be done in 9, 10 months. So they just want that injection, just, quickly and all that. So there are a lot of deals out there which we are looking at. So it's collateral is the asset backed and cross collateralization and strong control rights and the low leverage. That's the other thing we want to mention, is that there will be assets in the 60 to 65 LTV, which is not 80 or 85 or 75. We're not going to inject money into those. So we'll be looking at what's the present value of the assets, and then look at the LTV before we invest our money into it. Huh? So
Mm-hmm.
investment screening is very, very important to us. So private equity sponsors, proprietary networks that we have built over the last 15, 16 years, then institutional lenders and existing borrowers. We are having deal sources coming from them. And then we evaluate like thousands of opportunities that we evaluated, in 2022 and 3, and then 10% went through complete due diligence, and then only 3% resulting, in offers and so on for us, right? So, and then focus on the risk management. So we are very thorough so that our investors can see what is our due diligence process, how we do the stress testing and financing, then active monitoring, and then exit strategies. So we made a really nice PowerPoint to kind of share that with our
Mm-hmm.
investors. So this our fund exit strategies are three. The first is, of course, if there is a refinance or sale, as you know, that is the big way that we'll be able to get maximized returns will be upon the sale. We'll get our interest plus the principal plus equity. If they gave us equity also, then we can get that, back into the fund. Second will be the refinance. That'll be the one. Now, third is the takeover. But of course, we don't want to get there. But if in our provisions in the legal paperwork, it is true, we can take over and then we could run the operations, because we've been doing it all over, 16 years now. So
Mm-hmm.
but that's the last resort, right? So strategic alignment and the synergies of cost efficiencies and integration into the fund's existing portfolio, which we, will be able to manage that right there. And then this is over here again. I think it's a redundant. I know it's put again, offer summary. We're going to be paying quarterly. So we expect to give out our first monies like in July, you know, because now it's January. As the money is wired into our banks, we'll be able to position them out. and then we'll start getting the cash flow from the investments, and from those cash flows we'll be paying our investors. Huh?
All right.
I know,
Pretty
yeah,
much
that.
Class A is less risk, or I mean, it would be a better interest,
Yeah,
but
yep,
you get less equity. In Class B,
correct.
you get more equity. So over like 2 years or so, you would probably be better off with Class
B.
B.
B, you're right. You're right. Exactly. Otherwise, in Class A, you're so right. It's 12% preferred per year. So 12 plus 12, 24%. But in Class B, it could be maybe instead of 12%, it might be 13, 14, 15, 16, per year. So it could be
Mhm.
higher. Definitely. Definitely.
Mhm.
And then our investors can actually use both. They could invest some in A and B also, because we are using a very fine company. I would love to share with your investors. I'm just coming here. It's called NAV. NAV is the company's name. NAV Consulting. I'll just come here, and they are very, very good company. And we have a
Oh,
new CPA also, that we have, NAV Consulting, and also we have CPA, and also look at this one, recognize the global leader in fund administration. So
uh-huh.
that's the company we are already contracted to use. Oh my gosh, Vinod, what did you do? Sorry about that. I was just trying to open it up. Okay, oh, right there. NAV is in the background, right there. So
Mhm.
they established in 1991, 260 billion, billion under their administration, not under their like AUM for, under like that, but
Uh-huh.
administration. And then 99% client retention.
Oh,
They
that's
have 2,500 employees. Oh my gosh. And they are based in USA, and then 2,200 plus clients. They are really top of the line.
serious people. Yeah.
Yeah, very, very good people. So we'll be doing all that through them, technology,
Uh-huh.
services. Our portal will be there. They'll be the one who'll be, sending of course, updates and everything. Of course, we have to approve them. And then they'll be distributing quarterly into our investors' accounts and all that. Yes, yes, yes.
So, Vinny, there's a question on the previous on your
Yes,
presentation.
slide.
In the
Uh-huh.
beginning, the 12, the Class A opportunity was minimum 50K or 50 or 100K.
Okay, good point. You know what? I think we will take in special circumstances 50 also, but mostly we are going for 100K. But
All
we
right.
could take 50 also, definitely. I'm
Yeah, but
so glad
in
you said
previous
it.
and in the beginning of
There
presentation, I saw
was,
50K.
there is a 50 there. I saw it too. I know we just changed it this week to 100, but
Uh-huh.
it could maybe make a notation that, if you do have 50, we'll change it to 100, but we will give special preference, to even get our investors at 50 also. Yes, yes.
All right.
So we will be able to give that special, attention to those investors who might like to bring 50, but we are going after 100 plus,
Mhm.
which is good for everybody. That's how it is. Thank you, Elijah. Yeah, I know.
Yeah.
Yeah, I'm glad you observed it. I saw it too in my PowerPoint. And then, of course, Class A, Class B. Then, of course, frequently asked questions. Is there depreciation in K1? Definitely, there will be, or for Class B only, not Class A. How do investors receive cash flow? We vet all the deals for their performance and cash flow quality. We will only invest in Class A, Class A cash flowing multifamily properties with experienced operators, and that one. And then how does Class B investors get 70-30 split? That's a good one. We will be investing 30 to 40% into the deals that will give us a position in cash flow and equity percentage.
All right.
Yeah, hence we will be able to get the capital gains upside, which will be split with Class B investors 70-30. That's how that will
Mhm.
work. Just like which we have been doing, I've been buying like that. And is
Yeah.
this a short window of opportunity? Yes, it is. It's a short window. Is closing in on this opportunity. It's a closed-end fund. And these types of assets will only be conducive to the market for the next year or so, and it's first come, first serve. And then we did a summary of the terms. And then asset management, I would love to share also with your audience, meet myself, Vinney Chopra, founder and CEO, our daughter Monica, who's partner in the business and been doing it for last 7, 8 years with us, and Anna Martinez for 16 years. She's been with us and really,
Mhm.
really. And then my wife used to be next to me, but she's retired now. So Kanchan is not here, but she's involved in the business, in the
All
back
right.
end. And then our other partners, Sapan Talati and Pooja Talati, brothers, sisters, and Denver Lobo and Deepa, they are also. So all of us together will be in the GP side, and plus our, like Elijah, yourself, or other partners who will be helping to help us to get other investors involved in the thing. Yeah, yeah. Then we have case studies also very nicely to kind of put it together. Second case study, first case study, so our investors can kind of look at it, and and then of course they can reach you directly, and then you and I will be able to look at and meet with them right there, huh?
Yeah, beautiful. So, in other words, people that have money sitting around doing nothing, and
Yeah.
they're kind of also concerned about the market, concerned
Yeah.
in these situations. Can you talk about risks? What could be the risks
Love to.
of
Love to.
them investing? Yeah.
Love to. To be very truthful, there is hardly much risk at all because we are not buying $30 million multifamily or $40 million, but we'll be putting a position into 30, 40, 50 to $70 million deals by only giving them 1 million to 2 to 3 or 4. It's a marvelous situation. Myself or Sapan or you will not be on the loan at all because the operators who are very savvy, it's just, and they bought very good product also. It's just that they are in a little crunch, short-term crunch, we call it. They need that 1 million, million and a half, 2 million to get to the next level because of interest, increases. Interest rates have increased, we all know. Insurance premiums increases, or rate caps locks, which expired, and they would like to get that rate lock to keep that low interest rate for year or year and a half, or they're going into refinancing. So the risk is much less for us and our investors. Of course, in the PPM, the private placement memorandum, it's going to say all over the place, you could lose your investment. You could lose your
Yeah.
investment. But, but investors should be rest assured that we'll be investing their money and our money, into solid assets, solid assets. So they are not on the loan. We are not on the loan, but we are savvy operators, and we'll be, doing full due diligence where the
Yeah,
money is
yeah. The
invested.
good thing that Monil company has been he knows the game from within, so
Yeah,
we know where we're investing, and we're not going to mess up the investment.
totally,
So, and
totally.
would we can we think it as a like a private loan for temporary
It is.
solutions for
It
these
is.
big operators?
Totally. That's exactly what you're
And
saying is totally right. Yes.
in case, so by getting this private loan, we have in contracts we either get in equity, or
Both,
do we have a
both.
right to put a lien or on property or something?
Yes, we
How do we
do. We
protect
have
ourselves?
full rights. We have full rights to put lien and foreclosures and everything. So everything will be spelled out in each joint venture contract, we call it. As we give the money from the fund, each asset will sign with special provisions, is the word, special provisions, that we will be like the bank. right after their senior bank will be the bank who is giving them equity, and we could take them to, if they don't pay us, cash flows and or anything, and if things come to a point where we have to take them for sale or for taking over, we can do it. Yes, yes.
That's good.
It's
That's
very
good.
good, very
So
good.
it's exciting. That's a very creative way you thought of in the times
Thank
of
you.
uncertainty to come up with this like a rescue solution, which can save people's deals and make money, create win-win solutions for many.
So
So
true, Elijah, and I would love to share with your investors that as the interest rates go down, they are thinking maybe in June or July now, they were thinking about March or April, but they are saying Fed is going to drop down interest rate 0.25 basis 3 times this year. That will be even better for our fund. Why? Because interest rates, as they come down, the cash flow will increase of these already performing assets. So we like that.
mhm.
We want to just lock in, give them the money when they need it, and equity position, we could get it because they're in a bind. And then as the interest rates go down, or insurance premiums go down, or anything, economy improves, we'll be in a better position.
Yeah,
You
yeah,
know,
they can start generating cash flow and pay
cash
off.
flow. Yeah, exactly,
Beautiful.
exactly. So it's a very unique kind of strategy, which we have never done it before, but it's good to pivot. That's what Sapan and I and his company and Manik and Pooja talk every day. We are asset managing our other assets, and a lot of people are very, very happy with us, who we are and everything, and even in the senior living, by the way, I sold Punta Gorda, built it from scratch in these uncertain times. And my partner and I took zero money, but we gave our investors 43% returns on their money.
Wow. Yeah, I know those
Uh,
stories with you. They happen, and that's why I love
it
to hear
just
these stories
happened,
because they're very inspiring.
Yeah, out of 40 deals, if one goes south and we didn't make money, so what? Doesn't matter. The key thing is our investors are happy.
Yeah,
And that's the big thing. And even in Williamsburg, we are behind due to COVID and cost of goods going higher. If any of the investors who might have put money in, Hampton Manor, I'm just saying that we are 90% built. We got the new loan for the extra cost and everything. So we are planning to open up the facility, and we'll be able to stabilize and all that. Yeah, yeah. So our
that's beautiful.
heart is with our investors always. We want to make
Yeah,
sure
yeah.
that, yeah.
You've been in this business since what year?
Oh
For
my gosh. Well, I got into this at 2005. That's 19 years. I started buying after learning for 2, 3 years. I started buying in 2008, and now it's 2004. So 16 years, 16 years.
That's awesome, awesome. And
Thank
I
you.
only, since I know you, I only see hear positive stories and how you put
Ah,
investors first, and that's
thank you.
name. That's a
Thank you.
integrity. So
Thank you.
speaking about investors,
Mhm.
who can participate? Do they have to be accredited or sophisticated? Tell us more. Who can participate in this fund?
I would love to, love to. I'm glad you asked that. Since it's a 506 exemption offering of the Regulation D, it's for accredited investors only, who would like to put in 50,000 or 100. We do like 100 plus, and then they'll get bigger. But what is an accredited investor? Verifiable accredited investor is somebody who has $1 million net worth, not including their primary residence. So they could be looking at all the assets minus liabilities and all the, rental houses they have, all the value, their savings, their all the possessions, everything, and retirement funds, how much, all that, right? Minus the expenses. So that's 1 million plus, or they could be making 200,000 in the last 2 years, or 300,000 as a household income, they call it. SEC says like that. For the last 2 years, and with the same probability of this year. So they could qualify also as a accredited investor. And it's only a small paperwork what their CPA or their
Mhm.
financial consultant or attorney can fill out a paperwork and turn it in. That's, that they're accredited. That's what only we need. Yes.
That's good. I mean, so people understand the risks. These are not people that are giving their last earned money and
Yeah,
they will lose
exactly.
everything. Yeah.
Totally, totally. Not at all. Not at all. And the beauty is that, we want to see who you are investing money with and also work with the operators who have a track record and a good track record. And then the biggest thing is also this way we can advertise. And a lot of people are reaching out in my social channel and they're coming to the webinars. We had 19 investors, I think. Just the one I just did we have 14 or 17 again, just in few days, who want to join tomorrow. Yeah.
Beautiful. So, if people want to join, I will put the link under the
Hmm.
description to join your presentations, and that's awesome. I'll talk with my friends, and maybe we will be participating in your fund. And
Oh, thank
for
you.
my audience who wants to learn, who doesn't know Vinney Chopra yet, he's my mentor that I'm reading, listening, and enjoying his inspiring stories. He's
uh,
like me, an immigrant who
mhm.
came with $7 in a pocket, right?
$7, $7.
And
Yeah.
today you operate over. Did you say over around a
Billion.
billion? Billion dollars.
AUM, $1 billion. And that's my GP side. With LP, I've invested in 21 different deals also on top with metaverses and with my cloud defense cybersecurity company with MedTech and all. If I put it all together, AUM with GP and LP is close to 1.9 billion. Yeah,
Beautiful.
with the grace of God, it has been really wonderful. But the big thing is, and the books that I've written, 3 books, as you know, I just published my second book, again, Revised Positivity Brings Profitability. If anybody in your contact would like to get free copies of my books, please go on my website, vinneychopra.com. Just VINNEY Chopra.com. Free book. All the 3 books I want to give to millions of people, audible copies as well as the digital copies.
Amazing. Amazing.
Thank you.
Totally worth it. And we just saw the websites where you had a lot of people
Yes,
joining,
yes.
subscribing, and getting the content. Vinny, I really appreciate you for inspiring stories and for the
Ah,
vision you have. And uh, knowing you, you will never retire. You will never grow old because you're always generating awesome, genius ideas. So I'm glad to be a friend of yours and
ah,
glad to hear the opportunities you're including me in. So
oh,
thank
thank
you.
you
I will
so
totally
much.
share it
Thank
with
you
my
so
community. And
much. I appreciate that. And we are recording this webinar together. This one, I'll be sending them to you, Elijah, right away. And then we'll connect and hopefully join me, tomorrow. Everybody, I'll welcome. Please share the link with other people also so that they could join also. Your family, friends, neighbors, anybody. Thank you so much. Thank you, Elijah. God bless you. God
you
bless you.
too. God bless.
I will stop.